Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. Today, I want to talk about understanding accounts receivable. So, you've heard me say before, accounting, we have a lot of jargon, a lot of acronyms. And one of the most uncommon acronyms that a lot of individuals do not understand, particularly small businesses, is accounts receivable. So, when we look at the balance sheet, we see accounts receivable and we see a number. But what does that number tell us? What is that number? So we have to understand, we have to peel back the onion. We have to understand what that number is. And in order to peel it back, we add on another report. So I want to go over some terminology today to help you understand what's accounts receivable. So accounts receivable is money that a client customer owes the business. Now, depending on your business, you may not issue out invoices. So, an invoice is a document a business creates that says, client, this is what we're going to provide to you, whether that's a product or service. It lists the description, it lists the amount, the tax quantity, and the term. So, the term is how many days that invoice has to be paid. That's the invoice process. Now, if you're using an accounting system such as Wave, FreshBooks, or QuickBooks, when you create an invoice, the accounting is done behind the scenes. And what I mean by that, that the accounting system puts the invoice amount in the correct accounts. So you may know in accounting we use a debit and a credit. So you have to increase an account and you also, yes, I'm sorry, you have to debit an account and you also have to credit an account. So when you create an invoice, it increases an accounts receivable because that's money someone owes you, and it also increases revenue. You may call it sales in your accounting system. You may call it income. So it increases revenue. And when you increase revenue, it does not increase cash because that invoice has not been paid. So when you see accounts receivable number on your balance sheet, that amount represents the dollar amount customers owe you. And in order to see who owes you, you have to run a accounts receivable aging report. Aging means how old is the invoice? Is it 1 to 30 days old? Is it 20 days, old? Is it 15? Then it could be, 30 to 60 days. So when you run that report, depending on how your accounting system is set up, usually the first column, it lists the customer, and then it lists like the invoice, one if it's 1 to 30, if it's 30 to 60, and then if it's over 60, depending on your accounting system. So in order to understand accounts receivable, you can't just look at the balance sheet. You have to look at your accounts receivable aging report. Some accounting systems may call it accounts receivable aging detail, accounts receivable summary report. Very important to review that report, that aging report weekly, because it tells you who owes you, and you want to make sure that they're actually paying you. So those are just some terminology that you should know. So once again, accounts receivable, term, aging. Another thing I want to mention is bad debt. So if a client does not pay, you need to actually record that invoice as bad debt, which just means it was uncollectible. And I suggest an accounting professional to help you do that. So as you're working through learning your accounting system, you want to increase your accounting knowledge. These are some of the things that I would say, it's not taught in webinars or workshops. They'll tell you the terminology, but there's another step to that. There's another step to understanding the financial statements. We talk a lot about the three financial statements: the profit and loss, the balance sheet, and the cash flow. But to understand accounts receivable, you have to pull that accounts receivable aging report, and you have to understand what's the meaning of accounts receivable, invoice, terms, bad debt, even credit memo. So I challenge you this week, pull up your accounts receivable agent report. If you do create invoices, pull that up, see what customers is listed, verify if actually the data is accurate. Because sometimes I've seen businesses, they're getting paid, but they're not offsetting the customer payment to the invoice. So once you create the invoice, that payment needs to offset it so it doesn't show up as outstanding anymore. So check accounts receivable. Even if you do not create accounts receivable, still run the accounts receivable agent report, because I've seen this also happen, that there's an error and somebody in an accounts receivable and they don't even create invoices. So I challenge you to review that today. Make sure you subscribe to our YouTube channel. We have many lessons on understanding accounting terms, understanding business processes to help you go to the next level, to make sure you understand how to manage your business finances. I'll see you next time. Have a good week.